All right, everyone. Welcome to the Hawaii Association of Mortgage Brokers webinar with Freedom Mortgage and Kelly Dunbar today. Get lucky with Freedom Mortgage. We're so excited. Thanks for being here today, Kelly.
Thank you so much for having me. I'm so excited to see everybody today.
Yay, you look amazing. I love your little ears. So cute.
You got to celebrate, right?
Absolutely, absolutely. And then thank you, Angel, for being here today. Angel, as everyone knows, is the educational director. So thanks so much for being here, Angel, and for your work on the board. It couldn't do it without you.
Thank you so much.
Oh, you're welcome. We will give it like 5 more minutes. We've got a few more people jumping on here. So we'll just talk a little bit while we're waiting for them to jump on. What are you doing for the holiday, Kelly?
Actually, I am in a ping pong tournament. It is St. Patrick's Day themed ping pong tournament. So there's all kinds of shenanigans. Like it's a fundraiser, so you can buy like an eye patch to make the other team wear it, so they're only playing with one eye. Or you could purchase a little tiny racket. They have to play with that. So I've done it for a couple of years now. It's a very funny tournament.
Oh, that is so cute. Oh my gosh. So how do you buy these items and then force the other team to use them?
So there's some, it's because the whole thing is a fundraiser. So you pay to play, and then it's a blind draw. You just play with somebody, you get partnered up with somebody, and then you play through a tournament. So because it's a fundraiser, they'll start to auction off the eye patch, like who would pay $5 to make their opponent wear this, who would pay $10 to make their opponent wear this. And so meanwhile, you're raising funds, and you're laughing, and you're putting your opponent at a disadvantage so that you can win. It's just a title that you win. There's no actual prize because it's all for fundraising for a good cause. So it's a fun tournament.
And I'm sure there's cocktails involved.
Absolutely, absolutely. No, you can't have shenanigans without cocktails.
Absolutely. I remember there was a place in Waikiki that would make you ride a little tricycle on Sundays. It was at one of the Irish pubs, and they raced around the bar, and same thing, just shenanigans, super fun, lots of drinks, and just having a really good time on a Sunday.
Gotta have green beer, right?
Absolutely, absolutely.
Yum.
That is so wonderful. So we are at 10:04, and we'll give it about 1 more minute, and then we'll go ahead and get started. Okay, I think that we can start with some of the thank yous. So first off, once again, for those of you that just joined, welcome to the Hawaii Association of Mortgage Brokers, aka HAMB webinar with Kelly Dunbar and Freedom Mortgage. She will be sharing with us today about their programs, as well as some of their guideline changes and single unit approval, because I know everyone's so interested about the condos right now. So first off, let's go ahead and thank not only Freedom, who is one of our platinum sponsors. Thank you so much, Freedom and Kelly. Finance Factors, also a platinum sponsor. Kind Lending, platinum sponsor. Gold sponsors, we've got Angel Oak Mortgage Solutions, Acra Lending, EV Costa with Mutual Underwriters, and Territorial Savings, as well as Home Express Mortgage Corporation for gold. And for silver, we've got Deep Haven, thank you, Angel, First Hawaiian Bank, and The Lender as our silver sponsors. For everyone, please remember that in addition to our wonderful webinars and educational presentations, we also all are about fun here at HAMB. So make sure that you are going to hamby.org and make sure that you're clicking on the calendar, the events calendar. We have been working very hard to keep this update and up to date for you. So if you go onto the calendar, what I can tell you is it can be trusted. The events on there are accurate, the times on there are accurate, so please make sure that you're going there and checking out what events are coming up, and then joining us in our mission and all of this fun that we're having. We had a blast at the Hamby Chili Cook-Off last couple of weeks, and Fidelity national title. You know, kudos to them for their white chili. It was absolutely delicious. We had a blast down there at Ferguson's. And then on March 20, we will have the next Hamby Golf Club at Kapolei. The Pauhana, so that's going to be our next good fun activity. Pauhana March Madness to celebrate basketball down there at Ferguson's Pub. So for those of you that have been to Ferguson's, it's right there on the bottom of Ala Moana or Nimitz and Bishop, and we'll be there again on March 21st, I'm sorry, at 4 p.m. for the Pauhana March Madness. And then going into April, we've got the Hawaii Food Bank, where we will be packing lunches for the keiki. So please head on over to hamby.org, sign up for that. That's going to be on a Saturday, April 6th, starting at 7:45 in the morning, volunteering down at the food bank. And then bring your realtors, bring your family, bring your realtors. It's not just for Hamby members. It's for anybody that wants to come out and help the community. And then April 10 will be our next webinar, which will be with the Appraisal Institute, where we will be talking about appraisal innovations and insights and some of the new appraisal forms and guidelines and reform that's coming forward as well. So you won't want to miss that. But without further ado, let's go ahead and pass the presentation to Kelly, and let's hear all about Freedom Mortgage and what's happening over there with you, Kelly. Thank you so much for being here with us today.
Thank you, Judy, and thank you for all that you do. I mean, even just having that accurate calendar is kind of amazing, right? But you're organizing and all the work that you put into doing this and supporting the sponsors and supporting Hamby, and appreciate everything that you do. Thank you so much. All right, so let's talk about getting lucky with Freedom Mortgage. So today, mostly we're going to talk about single unit approvals for FHA, but I want to just first say hello, introduce myself, Kelly Dunbar at Freedom Mortgage, or today the Lone Leprechaun. And I just put a little quote in there because this is one I actually use quite a bit, is that I believe luck is what happens when preparation meets opportunity. So, right, you can have a little bit of both, luck and preparation, and that's what it really gets the magic. So today we're going to find the luck of the Irish with FHA single unit approvals. This is becoming more and more of a topic, so I just wanted to chat about it today. So we're going to talk about FHA single unit eligibility for non-FHA approved projects. This obviously is quite a good topic for us because we don't have very many FHA approved projects in on any of the islands. So this is a really good opportunity for us. So it's a kind of targeted towards first-time buyers. First-time buyers, generally speaking, are buying, they have a smaller purchase price, which generally leads to condos. Single families, we know, are quite a bit more expensive. So this goes arm in arm with the FHA, which also helps maybe borrowers who don't have the strongest credit or history. So FHA, we can have like zero credit history or zero FICO score. We can do a manual underwrite for those. So this is a really good opportunity to get first-time home buyers into homes, and we can couple it with the single unit approvals for condos. We have a fast and easy review process. I'll talk a little bit more about that, and the Freedom Condo Advantage. I'll chat with you about that. And then lastly is our approval process and project desk support. So on to the next slide. So let's talk about the single unit condos. Basically, in the Great Recession is when HUD suspended what we used to call spot condos, spot approvals. That happened. Basically, HUD said there was too much exposure, too much risk in those types of projects. They were only lending in condo projects that were fully FHA approved, which I don't know if any of you have ever tried to entangle yourself in that process, but it's not simple. It's a lot of documentation, it's a lot of paperwork, and you're working with HUD, who isn't always the quickest or most responsive. So it really limited condo availability for FHA financing. That was the next point. Look at that, I read into it without even intentionally doing that. So the new rule, I think it was actually 2019, was that borrowers can obtain single unit financing on non-FHA approved condos. So you do have to meet, there's certain requirements. But one thing I'll mention, and I'll get into this a little bit more, is those condo requirements right now are far less than conventional financing. So I am finding right now that if you have a condo, it is much, much easier to go FHA or VA than conventional right now, because Fannie and Freddie have actually tightened their guidelines. I'm sure some of you are feeling this pain on conventional financing with condos. So those are getting more and more difficult to get approved. So this is a great opportunity for more borrowers to get more condos approved that we can't, maybe might be a perfectly great conventional borrower, but we can't get it approved conventional. We can look at it for doing this FHA single unit approval. So let's talk about single unit approvals. So only right now, of 150,000 projects across the United States, only 6.5% are FHA approved, which means there's a huge market out there for these single unit approvals. There is a max percentage of FHA financing per building, but because there's so few projects approved at this point, we're not running into that at all. It basically means where there's another 20 to 60,000 units available. And it's even, I think the percentage of approved projects is even lower in Hawaii, which means we have a bigger opportunity here. Because historically, Hawaii, you can look these numbers up on HUD, they're published to the public every month. Historically, Hawaii has been one of the lowest percentage of FHA financing. And that's basically because our FHA loan limits, right? They're at 700 and some change, and you can't buy a single family. And then before, you couldn't get a single unit approval. So now that, the FHA availability for buyers just wasn't significant previous to this opportunity. So now that we can get condos approved with single unit approval with FHA financing, it really opens up the FHA financing to our borrowers. And so we haven't been in the habit of doing it for many years, but it's interesting to watch over the last couple of years, the percentage of FHA business increasing in Hawaii. And even just like personally, the percentage of FHA business I'm seeing is all mostly due to the single unit approval availability. Actually, I can't see. I don't know if that changed to your guys' screen or not, but I can see now. And then according to HUD, 84% of FHA condo buyers are first-time home buyers. So it's a really good opportunity when you're talking to those first-time home buyers to discuss, and with the reduction of the upfront MIP and reduction of the monthly MI and significantly lower rates than conventional, especially if you're having high LTVs, I'm finding that a lot of times the FHA pricing is actually cheaper than conventional. So we've been so trained to just go conventional, conventional, conventional. Keep an eye on this, and it is worth pricing as an FHA because you may actually save your borrower. I mean, I'm seeing consistently where payments are $150 to $200 less per month using FHA financing, even when they qualify for conventional financing. So just it's something to kind of keep in the back of your mind. It's worth taking another look at. I'm going to go to the next screen. Hang on here, I think my cursor is on the wrong part. Okay, there we go. So as far as the review process, it is actually quite easy. So client's going to identify the unit. They're going to put an offer in, and we can look at buildings. I'll mention this a little later too. We can look at buildings prior to an offer being made, prior to being an application. But let's just assume the borrower's made an offer, we've identified a unit, so now we want to see if it's eligible for a single unit approval with FHA. We have a single unit approval form that does need to be completed. That form then we send to HUD. So the keys on the single unit approval form, everything is quite simple except for these bullet points here. These are the ones that you have to kind of pay attention to. You are going to need the HOA tax ID. You need the number of owner-occupied units, project completion date, and number of completed phases. That does this, all those items do have to be completed before we can request a single unit approval case number. So what I suggest is working with, usually it's going to be your seller's agent or your seller to try and get that information, because sometimes, we know that the associations don't love talking to us all the time, but they have to listen to their sellers. So, or I should say the association management companies, not necessarily the associations. So that you will want to get those keys. Once we have that form completed, you'll send us that form to request a case number. And we have an email address. You can email me, you can email Jillian, you can get it to us by carrier pigeon, whatever works out best. And then we're going to begin our review. So we're going to send the form to HUD. HUD is about a 2 to 3 business day turn time. And what then HUD issues is the single unit approval case number. So it is the case number is specific for that type of property, just like it's specific to a single family or a townhome. So we do have to, or a fully approved project. So we have to do to make sure we order that case number correctly from the start. So you don't want to just order it as a single family without completing the form, thinking you're going to save yourself a couple days, because then we have to cancel that case number, go back and get the correct case number. All right, so this is just what the form looks like. I can email that to you. It's online in our resources on the website. So anytime you need that, just let me know. All right, so then what Condo Project is going to do is they're going to, once they get that, we're going to get this case number back. Once the appraisal comes in, we're going to review and we're going to get our R105C. We will order that. Actually, it's a different form for FHA. I should know that by the top of my head, but I'm not coming up with it. Asking those general questions, then we can review and approve the project. So keep in mind, the single unit approval case number is not a approval of the condo just yet. We still need to get the appraisal. We need the case number to order the appraisal, right? So we've got to put one foot in front of the other. Can't leapfrog that, unfortunately. So in terms of project review team in general, they're super helpful. You can reach out to them directly. You can ask questions to me and I can forward them, but they'll answer any questions you have on any agency guidelines, whether it's Fannie, Freddie, FHA, VA. We all know to just go through the VA condo approvals. So they're super helpful with that. We will do pre-approval. So I mentioned this a little bit earlier. If you have a project that you're interested in, but you don't have an offer yet, shoot me over that address and project name, and I can reach out to my condo desk. I can, number one, for conventional, have them check CPM, Condo Project Manager, to see if it's already been reviewed by Fannie or Freddie. If so, they'll tell us if it's approved, if it's not been reviewed, or if it's currently declined. I don't say declined, they have another word, but we can check that. We can also, if you've got documents, if you've got condo project documents, but you don't have a loan yet, or you don't sure if you have a loan yet, we can review the entire package if you have litigation prior to having a loan number, prior to a submission. So if you ever have any questions with condos, I'm more than happy to help. Early submissions is kind of really along the lines of pre-approvals. The SUA request form, same thing, send it on over either prior to or after you have an application, either time. We're happy to take a look at it. Site condo enhancement. This is a good one. Attached townhomes are now considered site condos. Site condos are basically the same review as a single family. So there's not a lot that you have to do. And previous to that, and like still, Fannie and Freddie considers if it's attached, it is considered a condo and it has a whole different type of review. Where FHA now considers, even if it's attached, doesn't have to have air in between it, that would be considered a site condo, which is a lot easier to deal with. Here we go. I'm going to stop talking about condos for a moment and let's talk about some St. Patrick's Day information. I just threw this in because it made me giggle. A couple facts about beer. There's 55 million glasses of beer consumed every day in the world. I have a funny story about this. When I was pregnant, my first, we were in Europe for most of my pregnancy, and my sparkling water would cost more than my husband's beer, and he told me I was being high maintenance by not drinking beer every day when I was pregnant. And then 13 million glasses of beer are consumed on St. Patrick's Day alone. So I just think that was a kind of a fun statement. And then I can open up to questions, and it could be questions about anything condo related or any other questions that you may have, but I just wanted to open it up after a little talking about single unit approvals and see if anyone has any questions. Judy, would they be questions from the chat, or I'm not sure?
Thank you so much, Kelly. That was so awesome. Yes, for everyone on the call, there is the chat is open. So go ahead and put your questions into the box. It looks like we've got a few questions going on already. So first off, from Dave Ige, a compliment on your outfit that you are always so festive.
Thank you.
And then his real question, of course, Can you send that info on the single unit eligibility list and advantages? How is Freedom handling the condo insurance if the master policy is underinsured?
Well, it's not an issue on FHA at this point. That hasn't come up at all in FHA. In conventional, it's an issue just like everywhere else, requiring full peril coverage. So we're stymied on that, just basically just like everyone else.
Okay, I think I'll take that a step further. So you had mentioned that when, and let's just kind of focus on FHA with this question, but you had mentioned that when when the package is submitted for FHA, SUA, or single unit approval, are they checking the Fannie list in order to get feedback from there before they pursue the SUA? Does that come into play at all? Would a conventional ineligible affect the FHA side in the underwriter's eyes per se?
Not at all. They don't cross-reference it, they don't cross-check it, and even if they did, let's say they had just that day had a conventional one on their desk for the same project, it has no effect whatsoever on the FHA financing, because we are following FHA guidelines, and as long as we follow those guidelines, it's insurable and saleable. So unless FHA changes their guidelines, the conventional guidelines has absolutely no impact on the SUAs.
That is really great to know. And as far as so aside from the insurance, a lot of the buildings have litigation. What can you tell us about FHA, SUA, and being able to overcome litigation? I mean, is it going to follow like conventional, where if it's structural, we're stuck, but if we can show it's not structural, we might be fine? Can you speak to that?
Yeah, you're exactly right. It's going to essentially mirror the conventional guidelines for litigation. So ultimately, if it's a health or safety concern, that's going to be ineligible initially. If it's something that is not health or safety related, then it can be reviewed. Generally speaking, that'll be something like civil, somebody's dog got bit, bit somebody else or something along those lines. So long as there are reserves, generally what we ask for is an attorney opinion letter that the reserves will cover whatever the cost may be to finish that litigation, remedy, I should say. So that's essentially following the same guidelines as Fannie Freddie.
Oh, very cool. Thank you for that. And I heard you also mention about the site condo enhancement. So that was news to me, and I was just jazzed to hear about that. So can you tell us a little bit more about the site condo enhancement, attached townhomes? So attached townhomes, which we before would have to send up for SUA. You're saying now we do not, even though they are attached. And then you had mentioned having air between the units. Can you expand on that quite a bit?
So Fannie and Freddie, and it used to be the case with FHA, so no longer is, there had to be air in between the units. That at no point could the unit connect to the other unit and be considered a standalone, detached, or site condo. So I actually had this conversation with Fannie. It was several months ago, because we were it was a CPR property. And so I said, no, that is not a condo, that's attached, that needs to price and be reviewed as a single family detached. And send over the appraisal. And because there was a shared carport on that CPR, they considered it attached, which meant it was full condo pricing, full condo review, the whole shebang. So Fannie's guideline is quite strict. It cannot touch another building anywhere. So air in between all perimeters of that unit in order to be considered detached. But the nice thing about this FHA update is they're saying, look, if it's a townhome and it is not, or like a CPR, and there's something attached, they're not going to consider it attached. They are going to consider it like a site condo, which site condos we treat as detached, like we treat like single family. So the only thing review on that would just be insurance, and that is it. from
Oh,
the
wow. Okay. And because we've got some buildings in Hawaii that, they're town-home-ish looking, but they still may be considered a condo, can you hand some guidance surrounding that as to, what the loan officers can look for?
Yeah, I mean, realistically, it's going to be determined by the appraiser. So that's what we're going to reference to make that determination. So it's hard to say. I mean, honestly, I can look at them on case by case, and just based on my experience, maybe I've done some property in that project, or I've done something similar. I can kind of look at them on a case by case, but it all really is going to fall down. It's only going to be determined by the appraisal.
Okay. What about the height of the building? Like a 3-story townhome complex or 4-story townhome complex as opposed to a high-rise condominium building. Is there anything in those arenas that might be telltale?
Well, I was with you until you said 4-story. Are you thinking that it's one unit that's 3 stories, or are there stacked units?
Stacked units.
I believe that would be considered a condo at that point and not a townhome.
Okay. Okay. All right. Well, thank you for that information. I think that's awesome. Now, what else so we talked a lot about FHA, and I agree with you that FHA is definitely having a moment right now, especially with a lot of the challenges happening in conventional, not only in condo, but just in pricing, MI, everything that you can imagine right now. And with the reduction in MI that occurred, what year did that occur, Kelly?
I think it was last year, wasn't it 23? I'm not sure.
Yeah, it dropped from 0.85 to 0.55, which was almost cutting it in half.
Significant.
And so tell us a little bit about VA condos, because obviously, conventional, we know what's going on there. FHA, we just learned a lot from you now. Tell us about VA condos, if the insurance stuff has started to come up, anything that you've heard.
Well, VA condos are my favorite, for sure, because they're the easiest. FHA isn't far behind right now, perfectly honest with you, but at VA by far are my favorite condos, because if it's on that VA approved list, even if it's with conditions, most conditions can be overcome with a letter of explanation from the veteran saying that they understand whatever the condition may be. I don't think I've ever had any condition turned down, actually, now that I think about it. So they're just so simple. So again, VA does not have the same requirements for perils, so the insurance isn't an issue. We're just making sure that it covers. The only review of the insurance really is to make sure it's covering the amount of the loan. So they are just, all we're doing is checking the VA condo approved list, the insurance, and they're done. I mean, they're easy peasy on squeezy.
Awesome. Can you tell us like a success story that happened where maybe a broker came to you, they had just been declined conventionally, and you were able to flip it into an FHA SUA and get the deal done?
Yeah, absolutely. Right now, the biggest thing that I see that I'm running into with the hindrance with conventional is the new guideline that Fannie introduced in October, which has to do with significant, what is it called?
Significant like repairs coming forward, yes. And any maintenance fee increases, the 5 questions that give us nightmares at night. Yep.
And so that there's a special assessment, significant repairs, that thing that, so those are, and the hard thing about that is Fannie is broad in that they don't really define what a significant repair, right? So they kind of leave it up to the determination of the lender, say, you think it's significant, then it is. And so that is, we know what the ages of our condo buildings on island, that includes a lot of them. And so those are very tough to get through. And those same guidelines don't apply to FHA. So I've actually been able to flip a couple of deals where we were unable to get it done conventional because it wasn't going to fit Fannie Freddie guidelines, and flip it to FHA. And I think honestly, both times, I'm tempted to say that the payment was actually less. Maybe not both times. Maybe it was just the one time because it was a high LTV. And the other one, they were actually putting down a significant down payment. So well, one we went was at 80%. That's right. So there was a small, but again, even with the monthly MI, the increase in payment was very minimal, and they weren't going to be able to get conventional financing at all. They were able to flip it to FHA, and the payment increased very little. Of the other one, the payment actually went down. We probably should have had FHA all along.
That's awesome. And I've actually found that as well. I mean, obviously a lot of it depends on the credit score, because if they've got a great 800 FICO, they're going to get a different conventional rate than someone that's got a 620 FICO, and definitely, depending upon LTV. But I've definitely found the same thing. Even if you have no MI, say it's at 80% loan to value, right. If you've got a not so great FICO score, you can flip that to FHA. And like you said, the payment is comparable with the MI, and sometimes even lower because of the drastically reduced interest rate. So and I'm a big fan that before I make a determination, that I will actually lay the numbers right next to each other, right? Lay the two options right next to each other and see what happens. Because with the new calculations, with the interest rates where they are, with the MI where it is, you could be pleasantly surprised with what you find out.
Absolutely. And the other benefit too of FHA is that you can streamline it, and we all kind of are operating under the pretense that we think a refi boom is coming, right? It's on the horizon. We don't know when, but I think we all kind of agree that we will see one here in somewhat near future. And being able to just streamline that loan to refi the rate, it's cheaper, it's easier, it's faster. So if you're putting yourself in a product that allows you to drop the rate quickly and easily, which is another benefit.
Absolutely. In fact, whenever I sit with an FHA borrower, I like to actually tell them that their loan program comes with so many other benefits. Welcome to the FHA family, I like to say. Right now, you can assume the loan. You can have your family members assume it. Now you can, like you mentioned, streamline it when the interest rates start to drop. And as we all know, we are going into a rate dropping environment over the next year or two. And with that being said, that's gonna give a lot of streamlined opportunities, and give you a reason to reach back out to your clients and get another transaction out of that, as well as offer them obviously amazing benefits. And even when, even for myself, I had a success story with FHA where the family needed a max cash out refinance because of their debt load. Their credit score had dropped substantially. Even though I was only taking them to 80% loan to value, I could not get that approved conventionally because DU did not like their credit. It didn't like their score. It didn't like their DTI. It didn't like all of that stuff. So it was limiting me to about, I think it was below 75 LTV just to hit, the debt to income ratio that the system liked. So I flipped it to FHA, and we were able to get it done at 50% DTI. I think it was at 49.999, and we were still able to get it done, and it gave that family a transaction. It was a little tough because we had to sell MI where they were used to not having MI. But, given the information in the right context, the family will understand what they need in order to get to that next level and to solve some of their other problems, which is this immense outstanding debt that they had collected over the number of years.
Well, you mentioned DTI. I want to mention one thing. Another perk of FHA is that FHA, you can get an approved eligible up to a 57% back end, 47, 57. DU will approve it. It has to. It's part of the algorithm. It has to like the file, but it gives you a lot more flexibility where we know we cannot exceed 50% with conventional. If you're struggling with that, flipping it to FHA, running it, you have a little bit more wiggle room there. So if we're stuck with manual, it's a different story, right? But if you can get approved eligible, it will approve up to 57% back end for FHA.
Yeah, and you're absolutely right about that, because being restricted to 50% DTI is actually a lender overlay. And working with you, Kelly, I know that Freedom has very few, if any, overlays. Can you talk a little bit about that? Because I think that's super significant in this market, especially because, with everything being as high as it is and rates being as high as they are, it's easy to exceed 50% debt to income ratio. So
Absolutely.
talk about that.
Well, and again, we think there's a refi boom on the horizon, right? So you're willing to get in and play a little bit higher right now, accept a higher DTI now, believing in, and it with good reason that you're going to be able to refi that rate down lower later, right? So getting into higher DTIs right now doesn't seem as ominous as, when like you're getting in at 57% when you're at 2.25 rate. And that is questionable. But when we think you're going to be able to roll that rate, those higher DTIs make more sense. It's interesting when I talk to people who aren't familiar with Freedom. I think the easiest way to kind of describe what define, in a one sentence description of what Freedom is that we are going to be the lender who has almost no overlays, that is very well priced. So we are very, very aggressively priced in FHA, VA, and conventional. We don't do anything outside of that box. We don't do any non-QM. We don't do any jumbo. We don't do any seconds. So we do what we do well. We price very well, and we have almost no overlays in those categories. So we're very comfortable with agency guidelines. We're very comfortable. We don't have any DTI overlays anywhere. I've got a residual income overlay for VA for high DTIs, but that's a whole other thing. So it's nice when you can actually underwrite to the guidelines and you can know what to expect without having overlays to worry about.
Awesome. Thank you so much for sharing that. And then to go back to condos quickly again, you had mentioned that the loan officers can reach out to you with the building name or building address, and that you will be more than happy to kind of scrub it against the various lists to see where it pops up. Obviously, the CPM with Fannie Mae, it's going to tell you if it is denied or ineligible, actually ineligible, and for what reason. So ineligible if it's approved and is eligible, or if it just hasn't been reviewed yet. Which, as far as I'm concerned, when I check the CPM, if it says it hasn't been reviewed yet, I'm like, yeah, we get chance, because that's so much better than it being ineligible and knowing that you have no chance in that arena and that you've got to find another solution. Now, do you at Freedom keep a list of, say, the SUAs that you have done, so that if you had success in a building previously, that the loan officer may be able to piggyback off of that?
We do. We keep a database of all approved condos. We actually keep a database of all approved condos that we close, so that we can cross-reference. Now, like with Fannie Freddie, we still have to cross-reference CPM even if we had done one, because they can projects tend to become ineligible at any time. So you may have closed one last week and a lender came in and they discovered something else. Now CPM is ineligible for all conventional financing for all lenders. So it's not CPM specific to the lender, it's to all conventional financing. But for loans that we fund, we do check our list first before, that's our first step in due diligence, and then check the outside list. So they won't publish that list. Just give me a list of ones that we've approved and we've done. They won't give it to me. But I am able to check that in my response time on it.
Wonderful. I think that's super duper duper helpful. Because I think right now, especially when you've got a purchase contract, it's, we always call it speed to lead, right? I mean, if you can figure out which direction that you need to go and burn as few days as possible within a 30-day closing period, and being able to lead that agent's referral and buyer into success, that's just going to lead to more referrals and more transactions with that real estate agent. Because time is money right now. And obviously having those answers quickly, whether it's yay or nay, or we've got to pivot or whatever the case may be, that is extremely powerful. And I know that one of the biggest differences, obviously, with brokers working in the field is many times they don't have access to the CPM, right? Their companies aren't giving them credentials and things like that. So because of that, to have you as a resource is phenomenal. And I know that there's a lot of lenders that are not offering that service. So that is so great.
Yeah, it really is great. I mean, and they're so quick about it too. I mean, that project team, they're great.
So when they do have a project that they want to investigate, is it best to just reach out to you directly, or do you have okay, great. All right.
Definitely easiest. Just shoot me an email with the project name and address, and we'll get an answer real quick.
Wonderful, wonderful. Well, for everyone on the call, the chat box is still open. So if you have any questions, please go ahead and ask some questions. Kelly is ready and able to answer all of those questions for you. We'll give it a couple of moments while they ask some more questions. And I'm actually interested in the ping pong you are doing this weekend. And so what city is that taking place in?
It's in San Diego. It's something, I was born and raised in San Diego, so it's a group that it's actually I believe it's an educational foundation that I've been affiliated with for some time. But then you get to know the people who are there, and you see each year, and you remember when somebody gave you the tiny racket that you had to play with. And I mean, I am not exaggerating. This racket is about that big, and that's it. That's all you can use. It is a lot of fun. And then, they had a twist last year, and I can't remember what it was. I'm sure it'll come up again this year.
How many shenanigans have you had one person experience at once while they're trying to play, like an iPad with the tiny racket, having to wear a hat while they do it?
I have seen, I think the most I've seen on one person at a time is two. One is so significant that you're better off putting one on each player because you're playing doubles. So I have seen two, just because, listen, like if it's your spouse, you just want to embarrass them, right? If you're playing against them, you can't lose. You got to do whatever it takes.
Well, that is so fun. Well, they do say right now that the most injuries happening in sports is actually happening in pickleball. So
really,
I think it's because you've got a bunch of people that haven't played anything in a long time, and then they're getting out there after drinking and then playing a bunch of playing something that requires a lot of movement and pivoting and joint access and movement. So they do say that there's a ton of injuries in pickleball right now.
Well, and just the sheer number of people who are playing, right? It's just taken off.
Awesome. Well, it looks like we don't have any more questions coming in. We've got Dave Ige chiming in that San Diego has the best Mexican food, which I definitely agree.
That is accurate.
With that.
Absolutely.
Do you have anything else that you want to share with the Hamby members before we click off today, Kelly?
I mean, I always have stuff to share, but you guys can, I watch my videos. I share most of my things that I want to talk about. Actually, you guys will see a repeat of this. This is a fun out, but I think I'll film a video this afternoon and send it out this week. So, if you don't get my videos and want to get my videos, let me know. But like I said, I always have all kinds of, whether it's important or not, I always have stuff to share.
Why don't we close out with your phone number and your email address for the folks that don't know you intimately?
What I should be able to do here would be probably the easiest way for everybody is here. It doesn't have either one. Now, how did I manage to do that? This is supposed to be the contact slide where I give you my information. Well, obviously the area code is 808 and the phone number is 367-8115. And then the email address is kelly.dunbar@freedommortgage.com.
Awesome. Thank you so much, Kelly, for being here with us today. Such a great presentation. I love this picture of you with this beard. and how much fun you're willing to have with it. And thank you so much for being our lone leprechaun today. It was our honor to feature you and Freedom and to bring this information. I'm definitely going to hit my processor up right now and flip a couple of the projects that we have over to FHA and see what we can get done. So thank you so much for that information. And I'm actually going to look at the townhomes too and see if we may not be able to push some of that stuff through. So just some really great nuggets that you were able to give us today. Thank you so much, Kelly.
Thank you for having me, and thank you for, again, for all the work that you do and that Hamby does. It's so important, and I'm so happy to support it.
Oh, thank you so much, Kelly. Have a wonderful day. And for everyone on the call, thank you so much for being here today, and have a wonderful rest of your day. Bye-bye.
Bye.